Las Vegas housing inventory just went up 30% year over year, but prices also went up? How is that possible? You're going to want to tune in. The November 2025 data tells a very interesting story. Whether you're looking to buy or sell, this shift happening right now could determine your next move.
Everyone loves big year over year headlines like that 30% jump in inventory, but real strategy happens in the month to month movements. When sales dip slightly from September and inventory creeps higher, but prices go up, that's early feedback from the market. It's how smart buyers and sellers stay one step ahead with a smart agent. After years of tight supply, we're finally seeing listings build up. That means buyers now have options, but sellers are facing new competition. And with interest rates bouncing between 6 and 6.5%, every pricing decision matters more than ever. So, looking at sales, we sold about 1,700 single family homes last month. That's down from last year, that's down from last month, but prices actually went up 0.9%. And they're basically flat from this time last year, sitting just under $475,000. What's intriguing is inventory, now over 7,500 homes. That's the highest number we've seen since early 2020. It's giving buyers a little breathing room and stretching months of supply to 4.4 months. That's up almost 45% from a year ago. That combination of data is super interesting. The math says prices should drop, but psychology says otherwise. Demand is down, supply is up. That means prices should fall, but they went up. Why? So pricing doesn't react instantly to data, it reacts to behavior. Sellers, you're stubborn and strategic. Most Vegas sellers today aren't distressed or over leveraged. They've got 3 to 4% mortgage rates from 2020 to 2022. They've got strong equity positions. They have no urgency to sell unless they're trading up or relocating or something else, disastrous. So instead of slashing prices, they pull their listings or they just wait longer for the right offer. That's why prices can stay flat or even tick up like they did, even when demand falls. So think of it as price stickiness. Sellers control supply elasticity. They simply opt out of the game rather than discount their price. The median price isn't a perfect indicator of appreciation, by the way. It's a snapshot of what types of homes sold that month. So in October, there were fewer entry level and condo closings, down 8 to 9%. There were more mid tier and new construction sales, which lifts the median even if individual homes aren't gaining value. So it's neighborhood to neighborhood. Prices didn't necessarily rise, the composition of sales shifted. And then there's micro market pressure. So inventory build is gradual, it's not a flood. Inventory rose just 0.5% month to month. That's a slow creep, not a shock. That's good. It takes several months of this consistent buildup before prices react broadly. So, right now, we're in the early innings of a softer market. Yes, momentum is changing, but price data always lags behavior. Let's zoom out. If you look at the trend line, inventory has been rising steadily since early 2024. That's partly seasonal, but also tied to affordability pressure. Buyers are stretching budgets a bit as rates, hover in that 6%, and yet sellers aren't slashing their prices. They're holding firm. Why? So, as we discussed, the majority of sellers have locked in those sub 4% mortgages, and they're not in a rush to sell unless they have to. That's why we're seeing fewer closings, down 10% year over year. Even though there are more homes available, you would think there'd be more closings because there's more homes to buy. It's just not the case. So, the translation for my clients, buyers, don't expect a crash. Expect opportunity, though, through negotiation. This is your first window in years with some leverage. You can negotiate on price or get seller credits to buy down your rate, especially on those listings that are sitting longer than 30 days. Get the sense of motivation. But remember, even though inventory is expanding, sellers are still protecting their price floors. Speaking of sellers, you've still got a strong market, but the days of multiple offers are well behind us now. Price strategically in week one and focus on your presentation. Professional photos, a little light staging, and showing flexibility be available. That goes a long way. The illusion of stability, by the way, can fade quickly. These month to month movements are, that canary in the coal mine, if you will. You have to price realistically before the lag catches up to you. And my investors, check out condo inventory. Rents are softening slightly, but cap rates are improving as those prices dip. Keep an eye on those cash flowing properties under 300K. Those are starting to pencil again. So, what do you all think? Are we heading into a buyer's market? Are we in one? Or is this just a seasonal slowdown? Drop your take in the comments. I read every single one. I'm Michael Coxen, your guide to the Las Vegas, Summerlin, and Henderson markets. Remember, awareness builds your advantage. So stay tuned for next month's market wisdom. Be sure to like, subscribe, and share this with anyone watching the Vegas market closely. Until next month, I'll see you on Instagram and on YouTube Shorts. Hope you have a great November. And then once again, drop a comment with your question. We'd love to hear your opinion as well on where we're headed.